Right now in the real estate market, we're coming off having mortgage rates at 8%, which was a 21-year high. Right now, we're at 6 and change, but the Federal Reserve Board's a tad wacky, so we could conceivably go back to that 8%, even though it's pretty unlikely with inflation the way it is right now. During that 8% period, we saw a substantial increase in mortgage payments over the past 3 years. And now many sellers are working hard to find ways to attract buyers to their homes. So instead of reducing the listing price, agents are recommending 2 strategies: offering credits or rate buydowns. A credit is a sum of money provided by the seller from their home sale profit, used to lower the sale price for the buyer. The credit is used to cover a portion of the buyer's closing costs or assist in a mortgage rate buydown. It can also be a credit for a new roof, new flooring, or paint if the seller knows that something really needs to be repaired, but they're just not willing to do it before going on the market. A rate buydown, however, involves the buyer, seller, or another party paying a portion of the mortgage points, which lowers the interest rate. A mortgage point, sometimes called a discount point, is a one-time fee equal to 1% of the loan amount. Paying more points to the lender up front typically results in a lower mortgage rate. The rate remains lower as long as you maintain your conventional loan. Now, a new trend is sellers offering a temporary buydown where they pay specific points to reduce the buyer's payment for a set number of years. These can be a 3-2-1 buydown or a 2-1 buydown. For instance, if, say, the current rate is 8% and you have a 3-2-1 buydown, your rate for the first year would be 5%, the second year 6%, the third year 7%, and from then on it returns to the original 8% rate. If needed, buyers can refinance their loan at that time. Certain new home builders offer a 30-year rate buydown, especially for first-time buyers. Builders can provide these incentives due to the substantial profits they enjoyed during the pandemic-driven housing boom, which offset the cost of rate incentives. Increases in material and labor costs have slowed from those record highs seen in 2020 and 2021, allowing builders to allocate funds to these rate incentives. As always, there are restrictions to consider, but this is typical in the real estate market. Currently, the best rates are hovering around 6.5%, but these strategies still apply. The housing market remains robust, with prices continuing to raise at about 5% per year. So if you have any questions or you want to discuss a 2-1 or 3-2-1 buy down options, feel free to reach out for more information.